It matters because there's $8 trillion in assets in 401k plans in the US. I know so many people that don't invest outside of their 401k plans, but what they do is every 2 weeks when they get paid, they allocate some capital to their 401k, and then their 401k goes out and buys basically on a long-term basis their portfolio that they're allocated to. And so historically, none of that capital, none of that 8 trillion worth of capital has funneled into crypto. So if you think about that just from a math perspective, if this guidance gets lifted, that means that every single week, more capital is funneling into these 401k plans. And if just 1% of the existing capital gets allocated to crypto, that's $80 billion of new capital that's entering the space.
Welcome to the Edge Podcast. I'm DeFi Dad here with Nomadic from 4RC. It is a holiday tradition here on the Edge Podcast to sit down with our friend Ryan Rasmussen, the head of research at Bitwise, and review their bold predictions for the year ahead. 2024 was monumental. The Bitcoin price shattered $100,000, spot Bitcoin ETFs rewrote the playbook, and pro-crypto momentum surged in the US. But according to Bitwise's top 10 predictions, this is just the start. We'll cover everything from Bitcoin hitting $200,000 to a meme coin boom driven by AI, and even a bonus forecast of Bitcoin overtaking gold by 2029. But before we do, just a quick word from our sponsors who make the Edge Podcast possible. Introducing REDSTONE, the fastest growing oracle for DeFi. REDSTONE is the leading oracle for liquid staking and restaking assets, supporting over 60 chains with both the push and pull models. REDSTONE protects more than $3 billion of total value locked and is trusted by more than 100 clients, including the biggest protocols in DeFi, such as Pendle, Venus, EtherFi, and Athena. The unique modular design of REDSTONE makes their price feeds available cross-chain, including EVM, non-EVM, roll-up networks, and all types of app chains. REDSTONE aims to bring the industry forward by supporting upcoming Bitcoin staking tokens and continues to be the #1 oracle provider for liquid staking and restaking tokens. Soon the team will unveil the highly anticipated REDSTONE token to decentralize the protocol. Learn why Nomadic and I rely on REDSTONE for our favorite DeFi apps at redstone.finance and join the REDSTONE expedition today. Overwhelmed trying to manage your crypto and DeFi investments? Meet iYIELD, a free financial planning tool for crypto natives and yield farmers. iYIELD's dashboard compares returns from your DeFi positions side by side, providing clarity to help you make better decisions. iYIELD supports a growing list of over 16,000 tokens and 40 of the top DeFi and staking protocols across 17 blockchains, including Ethereum L2s. The best part is that iYIELD is 100% free, anonymous, and there are no ads. Check out iYIELD.com today to take control of your financial future. Say hello to Puffer UNIFI. Puffer Finance is expanding beyond native liquid restaking, with new products such as UNIFI-based ROLLUP and UNIFI Pre-Confirmations AVS. UNIFI is not just another L2. UNIFI is a based rollup, one that will solve L2 issues, such as slow withdrawals versus instant withdrawals with Puffer UNIFI. Puffer UNIFI is fast, capable of sub-second transactions. UNIFI also has boosted Puffer points, which means if you bridge assets, you earn boosted Puffer points and rewards from dApps on UNIFI. Puffer's core products mean a bright future for Ethereum. Learn more at puffer.fi. All right, let's introduce Ryan Rasmussen, the head of research at Bitwise. Ryan, welcome back to the Edge Podcast. How are you doing, my friend?
I'm doing well. Great to be back here with you guys. Excited to get into it today.
This has been a huge year, and I think of all of the teams that have had the conviction to build in this space for such a long time and to, believe in like a Bitcoin ETF and an ETH ETF and many more ETFs that will follow. Just want to say congratulations. Like, you guys have had a big year for all of us, but I think Bitwise has to be having a huge Christmas celebration coming up soon. So yeah, how is everything on the team? You guys must be just thrilled.
Yeah, that's great. Well, I appreciate the kind words. It's certainly been a long journey for the Bitwise team. We were founded in 2017 and have been in the space since then. And I joined in early 2021, so I'm coming up on 4 years here. Kind of, a full 4-year cycle-esque into my time at Bitwise. But Yeah, vibes are high. We're really excited about all the traction we're seeing across the crypto market. We're really excited about how successful some of these product launches have been this year, the growing institutional adoption that we're seeing. We spend all day, every day kind of facing off with institutional investors of all different kinds. And I will say that their attention to crypto and their excitement about crypto and allocations to crypto are just up and to the right. So we're really excited about where the market is right now. We're super optimistic about where things are headed in 2025, and I'm super happy to talk to you guys about some of that today.
Before we start to talk about the scorecard for the predictions from last year versus the new predictions here for 2025, I do want to give you the floor, Ryan, to talk more about Bitwise and what is it. So, when my normie friends ask, I would tell them Bitwise is the largest crypto index fund manager in America, something like that. What else do you guys do? How do you work with the crypto industry? How do you work with investors, financial advisors?
Yeah, no, I appreciate that. I think, look, Bitwise is a crypto asset manager that's been around since 2017. All we do is help investors allocate to crypto in a number of different ways. We launched back in 2017 with the Bitwise 10 large cap crypto index, which is, one of the largest crypto index funds in the world today. But since then, we've grown into a asset manager with more than 30 different products. We span spot ETFs, futures-based ETFs, crypto equities ETFs that track companies that are publicly traded like Coinbase, MicroStrategy, and Bitcoin miners. We have active strategies, passive strategies, a number of index funds. And we've also, recently, which I'm really excited about, expanded into Europe. So predominantly we were based in the US, but we recently acquired the largest ETP provider in Europe. And so now we have a Bitwise Europe office. And then even more recently, we acquired Attestant, which is a long-time Ethereum staking provider. And we recently launched a couple weeks ago Bitwise on-chain solutions. And so now we're in the staking service provider game, and we rolled out Starknet staking just a couple of weeks ago as they opened up staking for their tokens. So Bitwise started as this small crypto asset manager with one fund. Today we manage 10 billion in assets, and we help all kinds of investors, mainly institutional investors historically, but now with ETFs we can offer retail investors a way to get exposure to crypto in traditional vehicles like ETFs. That they're used to, and that's really important for investors to be able to allocate to crypto in the typical workflows in vehicles that they allocate to other asset classes with.
Yeah, so every year you publish a set of predictions, like a top 10 predictions for the crypto markets. And one thing I'd love to do before we talk about the 2025 predictions is you had a scorecard that basically runs through how you guys did on your 2024 predictions. So I'm going to go ahead and do our best to flash this on screen as we go along. But the scorecard here, in terms of running through these line by line, one of the top predictions that fared very well is you guys last year predicted that Bitcoin would trade above $80,000 US, setting a new all-time high. So anyways, congrats on that.
Yeah. Well, thank you. It's fun to be right on these when you look back. And we always try to look back, as we go into the new year and see how we did in the prior year. I think what's important about this prediction is that Bitcoin was trading around 40,000 coming into 2024. So 80,000 as the price that we would hit was about a 2x from where we entered the year. Of course, we undershot what actually happened here. I think we hit an all-time high of somewhere around 103,000, 104,000 back earlier this month. And so, there was a lot of reason to be bullish on the price of Bitcoin going into 2024, but I don't think a lot of it had materialized yet. There was a likelihood of Bitcoin ETFs, but we didn't actually have Bitcoin ETFs yet. And there was a likelihood of rate cuts, but we didn't actually have rate cuts yet. And there was a likelihood of positive regulatory change following the U.S. election, but we didn't have that for certain yet. So I think, 80,000 felt right to us. And in post-election, we were certainly expecting, once things started to point towards a pro-crypto DC administration for the next 4 years, we certainly upped that to 100K pretty quickly.
Yeah, I forgot that you made these predictions before the ETF was even live, because you kind of made them at similar time in 2023. I think ETF went live somewhere around January, February, but The next one on your list was spot Bitcoin ETFs will be approved and collectively will be the most successful ETF launch of all time. How did that one fare?
Yeah, that's exactly right. So we put these out in early December. We started to kind of pull them together in November. So it's a couple months ahead of the year when we finalize these. But going into 2024, you're right. There were no spot Bitcoin ETFs. There were no Ethereum ETFs. There was pretty much no likelihood of Ethereum ETFs. But the likelihood of Bitcoin ETFs in our mind was pretty high. You know, you had the Bloomberg ETF experts, James Seyfarth and Eric Balchunas, putting the odds at 90% of approval, you know, coming in 2024. So we were excited about the likelihood of that happening. There's a lot of dialogue with the SEC going into January last year where it seemed like it would happen. And you know, our outlook for the spot Bitcoin ETFs was very optimistic. There was this 25-year-old record for the most flows into an ETF in its first year, going back to when the Qs or the NASDAQ ETF launched back in 1999. And that was $5 billion in its first year. And we thought that we'd have anywhere from 5 to 15 billion of flows in 2024. I think the highest end of the predictions from the Bloomberg guys was 15 billion. And it took just 6 months for the ETFs to surpass that record, that number. And today it's somewhere around 35 billion. So it blew away all records, all expectations, and we're super excited about it.
Yeah, and just noting, so Bitwise, the ETF is BitB, and as of this morning, I was just checking the numbers, has about 4 billion in assets under management. So just, yeah, huge victory there, huge contribution to like all of the growth in this sector. And it's funny, I remember when we recorded last December, we recorded an episode just like this about the predictions. What stood out to me was, you know, obviously, like, you aren't able to share any of the like information that, you know, the team is having to mull over and review and work through in order to get these ETFs issued. But gosh, I did sense the confidence that this thing was coming sooner. And I think it came within a few weeks after this. So such a huge relief. And we'll talk about the ETH ETF here in a bit, but like that was another like huge windfall. And Bitwise also has an ETH ETF, which is ETHW. But one of the other predictions that really stood out, I remember you talking last year about how bullish you were on Coinbase. The prediction was Coinbase's revenue will double, beating Wall Street's revenue growth expectations by at least 10x. Yeah, what else can you share on that? That was a hell of a prediction.
Yeah, you know, it's so fascinating to me that Wall Street continues to underestimate Coinbase's growth potential, and they just really don't understand Coinbase as a business. They think Coinbase is just this brokerage when it's so much more than that. And I think they thought Coinbase was kind of dead in the water with the rest of crypto back in 2023. So their revenue prediction was that, you know, in 2024, Coinbase would only go revenue by 9%, despite the fact that the market had really started to turn around already at the end of 2023. And so we predicted that revenue would double going into across the year in 2024. We predicted that revenue would double, and it's up 103% year to date through Q3. So I think we were spot on the money with there. And I just would reiterate that Wall Street still doesn't understand Coinbase's business model.
Ryan, this next one I love to share with maybe like friends that aren't in crypto, because I feel like this always kind of encapsulates the size that crypto is getting to and just how impactful stablecoins are. But you guys called that more money will settle using stablecoins than Visa. How did that one fare?
You know, that's a really interesting one. I mean, you're exactly right. Not many people know what stablecoins are in the grand scheme of things, but everyone knows who Visa is. It's a payments giant. They do trillions of dollars in payments volume every single year. We thought that stablecoin volume would surpass Visa's payment volume in 2024. It isn't quite there yet. You can't grade this one through this month because Visa's financials obviously get released quarterly like any traditionally publicly traded company. But right now they're about 17% shy of Visa's 9.9 trillion. So stablecoins have done about 8.3 trillion. So I don't think it's going to beat it this year, but if you were to look at this on a chart, what you would see is that every single year stablecoins get closer and closer to topping Visa's payment volume. And that to me is super exciting. Just shows how big the stablecoin market is growing to be.
One other thing to reference is the stablecoins, like the total market cap of stablecoins, according to DeFi Llama. As of this recording, it's around 200 billion. And so that is up from the start of the year at around 130 billion. Also, we did a previous episode with Sergey Nazarov of Chainlink, and I love the argument he made that everyone's bullish on RWAs, but like RWAs is already the most dominant sector of DeFi because tokenized cash is an RWA, and stable coins that are backed by treasury bills or just US dollars, like that is absolutely one of the killer use cases. What's cool about that too is many of these live across like all the major L1s and L2s. So it's a pie that keeps growing. It's a pie that serves all different communities of crypto users. So yeah, I have no doubt that that prediction could potentially play out this year, but probably plays out into like next year. One that I want to call out that fell short, as a .eth person, as someone who's been long Ether for many years, I was really excited for this prediction that Ethereum revenue will more than double to $5 billion as users flock to crypto applications. What's the update on that one?
Yeah, look, I'm a big Ethereum guy myself, I guess full disclosure there. And so I also was excited for this prediction. It fell short. So I think we're at about through Q3, 1.9 billion in revenue. The target we had was 5 billion. So it's pretty short of that target. I think one thing we didn't anticipate was just how much the EIP, I think it was 4844, was going to impact revenue on Ethereum. And so I think it's one of those things where we had this big step change in how efficient Ethereum is and how efficient L2s are, which cut down that revenue growth temporarily. But as we see usage of Ethereum grow over time and adoption of Ethereum grow over time, I think that the revenue growth will return. You'll just have much more users using the platform than dollars being paid in fees by individuals, if that makes sense.
Ryan, another one that's like kind of closely related to this, let me just pull it up here. A major upgrade to the Ethereum blockchain will drive the average transaction cost below 1 cent, paving the way for more mainstream uses. How did that one fare?
Yeah, like I wanted to rate this one an A, but our editing team wouldn't let me do that. So they gave us a B. I guess they're a tough grader. This did happen. Now, it hasn't maintained a sub 1 cent fee per transaction, which is why it's not technically fully correct. But we saw the upgrade to Ethereum drive the cost below 1 cent, here and there on different L1s, and then as activity picks back up, right, it kind of moves up, but it's still in the sub $1 range. And I know both of you have been around in crypto long enough and using Ethereum long enough to remember the times where it was hundreds of dollars to deposit capital into a DeFi lending protocol, or hundreds of dollars to mint an NFT or something of that nature. And today you're doing that for $1, $2, $3, and that is a tremendous step change in how efficient Ethereum is, and it makes it significantly more competitive with other L1s. And I think eventually we'll get to that sub 1 cent average transaction fee, but we didn't quite get there on a sustained basis in 2024.
The next one we want to highlight is around prediction markets. So you all predicted that more than $100 million will be staked in prediction markets as they emerge as a new killer app for crypto. I mean, wow, like so much more happened. I feel like prediction markets were at the center of the US election to a point that like when it was pointing in favor of either candidate, either party was excited to point that out. And then when it wasn't pointing in favor of them, they were screaming foul play. And then ultimately what the prediction markets basically predicted state by state who was going to win hours, even a day before like these results were called. So anyways, any other thoughts on like the huge W there under that prediction?
Yeah, I mean, look, we're so excited about prediction markets. I remember I was refreshing Polymarket, many times a day, probably starting mid-summer and then going through the elections in November. And I think we would have been better off saying $1 billion here because it crushed the $100 million mark so early in the year and by so much by the end of the year by where we're at today that it's just fascinating. Polymarket is probably behind stablecoins, one of the most high-profile real-world uses of crypto that we've seen penetrate the mainstream media and penetrate traditional markets today. And so we're really excited about where Polymarket will grow from here. There's some debate internally at Bitwise whether Polymarket will be able to sustain the level of traction that it gathered going into the election. As you mentioned, a lot of that trading on Polymarket was around the election. But there's some folks in the team at Bitwise that think that Polymarket's going to continue that upward trend and keep growing from here.
Ryan, I think this next one was a killer call. Right now in the crypto space, AI agents are sucking a lot of the mind share out of the space right now. We have AI KOLs that are the biggest KOLs on crypto Twitter right now. It's kind of like all the rage. And I guess, at this time last year, you guys said AI assistants will use crypto to pay for things online, affirming crypto as the native currency of the internet. I think you got this one very right, but curious your thoughts here.
Yeah, this is one where I think we had it right directionally, and it did come true. It did happen. There are instances where AI assistants were paying for things online using stablecoins, so definitely got that right. The new meta that has emerged, which we'll talk a bit about in our 2025 predictions around AI-based KOLs and AI-launched meme coins, is something that I don't think we would have predicted a year ago. It's not something we really was on our radar, and that's one of the beautiful things about how fast this industry moves and what can happen when two emerging disruptive technologies find ways to add value to each other. That's exactly what's happening right now with the AI-driven kind of meme coin and KOL meta. But yeah, AI and crypto technology, I think the synergies there are still being discovered every single day.
The next one is a bonus prediction. You all predicted that 1 in 4 financial advisors will allocate to crypto in client accounts by the end of 2024. So what's the update there?
Yeah, so we spent a lot of time at Bitwise. I travel around the country with our distribution team, meeting with financial advisors and wealth managers, going to lunches, dinners, golf outings, conferences where they are, mingling and looking in ways to grow their business. And so many of them still have not allocated to crypto. We also run this survey every year of financial advisors to see how much exposure they have in client accounts. And in last year's survey, only 11% said they had exposure in client accounts. So we thought that would grow to 25% at least in 2024. I don't think that's going to happen. We don't have the results yet of this year's survey, but I don't think that's going to happen. And the reason why is because majority of these large wirehouses, like the Morgan Stanleys, Merrill Lynch's, UBS's, Bank of America's of the world, where a large portion of financial advisors do their business, many of those large wirehouses haven't allowed for their wealth managers to allocate to crypto in client accounts yet. Some have to certain clients that have a certain net worth, and it's on an unsolicited basis, meaning they can't go out there and tell their clients, we should do this. Clients have to ask for it. So there's just still a lot of speed bumps in the road to adoption for financial advisors. I think those will clear out for the large part in 2025, but I would expect this number to come in somewhere around 15 to 20% in 2024. So not quite at that 1 in 4 level.
I can't get that meme out of my head about the guy in the Patagonia vest. We'll flash that image up so people know what I'm talking about. But man, these guys got to pick it up. It's embarrassing. One other one that I thought was pretty unique and kind of fun, and this one's near and dear to DeFi Dad's heart because he's a huge Swiftie. You said that Taylor Swift will launch NFTs to connect with fans in new ways. How'd that go?
Yeah, look, I'm a Swiftie as well, so I'm right there with you, DeFi Dad. But this is one where Taylor Swift has continually found really interesting ways to connect with her fans, and really is a fan-first artist. And of course, as we know, NFTs offer a really interesting kind of new vehicle to connect with fans in new and exciting ways. So we thought just her having been on kind of the edge of innovation in the music industry, that this would potentially come true. Taylor's come out and said that she's a bit concerned around the securities laws, or perhaps her team has come out and said that. And so that's probably one of the large reasons why this hasn't happened. But if we get some clarity in 2025 in DC, maybe this comes true. Just our time frame was too short, but maybe this comes true. Maybe we can mint some Swift NFTs. DeFi Dad in 2025.
seriously, if she were to issue NFTs and do like a giveaway, like make them free, I feel like it could be such a win for her. I think the real risk here is obviously pricing those NFTs and having people like look down upon it. But like, they probably of all teams could do it, quote unquote, the right way, just because they print money. So like, they're not, they're not desperate. They can really think about this thoughtfully and like almost do something that wouldn't cost them a whole lot on their side, but could potentially be huge. And at worst is like an interesting experiment. But yeah, I understand why they haven't done it yet. 2024 really didn't turn around until, I'm going to say November. Like November with the presidential election is where suddenly there was this like sigh of relief that we're not under the thumb of like a Gary Gensler for another 4 years and a bunch of other people that do not want our industry here. So happy to kick their asses to the curb. Bye, Gary. Have a great life. He's like, no problem. I'll just go live off the $200 million of my net worth. So, let's pivot to 2025 predictions then. So the first one, Ryan, I mean, it's a fun one. The first prediction is Bitcoin, ETH, and Sol will all hit new all-time highs, with Bitcoin trading above 200,000 US dollars. So what are your thoughts there?
Yeah. So our price targets for Bitcoin, Ethereum, and Solana, we kind of think of those as the big three, or the mag three of crypto. We see Bitcoin hitting 200K in 2025. We see Ethereum hitting 7K, and then Solana trading to 750. That's about a 2x for Bitcoin and Ethereum, and a little over a 3x for Solana next year. Now, it's worth noting that we start writing these predictions and thinking about them about a month ago, so early November. And so this was more than a 2x prediction for both Bitcoin and Ethereum back then. But still, we feel pretty confident around these. I would say this is, what we believe is conservatively optimistic around what these assets will hit. There's a few tailwinds for each of these that I'd be happy to run through. So for Bitcoin to hit 200K, we think what's going to drive the price higher there is continued institutional adoption of Bitcoin ETFs. I spoke about a little bit earlier that many wealth managers at these large wirehouses have not yet been able to access these spot Bitcoin, spot Ethereum ETFs, but we expect those doors to open in 2025. And so more flows into Bitcoin ETFs means more buying of Bitcoin. And as we know, Bitcoin is a supply constrained asset. I think Bitcoin is likely to produce somewhere around 150,000, maybe 175,000 Bitcoin all of next year. And the ETFs sucked up way more Bitcoin than that in 2024. So if you just think about it from a demand supply perspective, we expect the price to be higher. And I would just note if the US government follows through on its proposal to establish that Bitcoin strategic reserve and buys 1 million Bitcoin, we think 200,000 becomes 500,000 or more real quick.
Quick follow-up. There was talk about the Bitcoin that is held by the U.S. government. I think it stems back to Silk Road, potentially liquidating it. Like there was a movement between some wallets. I guess what I'm wondering is there any chance too that like the Bitcoin that is already held by the U.S. government that would fall under this future Bitcoin reserve, that gets derailed by the Biden administration, like acting quickly to like liquidate it? I guess like, do you guys have any concerns there? I know the selling pressure of that will easily be absorbed by the market. Like, I mean, it's no big deal at this point, given all of the demand with Wall Street and ETFs and even just retail governments across the globe buying it. But yeah, any concern there?
Yeah, certainly. Look, the U.S. government holds 200,000 Bitcoin today, nearly 200,000 Bitcoin. They are from those kind of law enforcement seizures that you referenced, Silk Road, other enforcement actions and seizures that have happened. I think it would be kind of wild for the Biden admin to liquidate that with, just about a month left before the Trump administration takes over. But, I didn't necessarily see the Hunter Biden pardons coming, right? So anything could happen. I do think that it would cause some dip in the price, but that those dips would largely be bought up, around the 80, 90K range, and we would kind of snap back up towards 100K pretty quickly. But that's certainly a potential risk to the price of Bitcoin that could play out over the next month or so. It's kind of unclear if the U.S. decides to maintain that that 200,000 Bitcoin that they own, if that would count as the first year of buying in Senator Loomis's plan, right? She wants to buy 200,000 Bitcoin a year for 5 years to establish that 1 million reserve. We were kind of reading through the details of that proposal, and it was unclear. So I think, though, at a minimum, the establishment of a strategic reserve is enough to set off this game theory and this kind of Bitcoin arms race around the globe of countries building their own strategic reserve. We're already seeing some signs of that game theory play out just by Donald Trump saying he was going to build a strategic reserve. You already have discussions in Russia and in Poland and in other countries where they're talking about building a strategic Bitcoin reserve. So I think once one country starts doing it, then tons of countries start doing it. And if you think about the size of those buys relative, again, to the amount of Bitcoin being produced from a supply perspective, I just don't see a world where it doesn't drive the price higher.
Yeah, and you've got a president that's literally coming out with like price targets, and I think he said the other day, like, yeah, we want to get Bitcoin to about 150K pretty quickly. That was like one of the sound bites or things that I saw flash on crypto Twitter, but absolutely wild stuff. And yeah, I guess TBD if Biden has paper hands. We'll see what he does with the current Bitcoin. But
I have a follow-up on the ETH price prediction, and I know you guys are throwing out like you're throwing out a very specific prediction with these, like, it's probably easier to throw out a range. But what stood out to me was with ETH at $7,000 as an all-time high, let's say Bitcoin is around $200,000 around that time, just the ETH BTC ratio right now, like, isn't quite in agreement with that. And so, like, if we can expect, I guess, more reprieve in the ETH BTC ratio, like, I guess, do you have any other thoughts to share on this? Like, I'm looking at it thinking, if Bitcoin were at 200,000 and ETH ever returns to the 0.06 ETH per Bitcoin, I mean, that alone is $12,000 US. And again, all of this is just speculative. Like, we're thinking out about like multiple variables with like a lot that can happen.
DeFi Dad wants you to say higher. That? He wants you to say higher, Ryan.
I want you to say higher. I won't let you off this podcast till you say higher. Yeah.
Look, you're not alone with that, by the way. This has probably been our most unpopular prediction in this entire piece that I've seen the most pushback from across Twitter. So you're definitely not alone in that. I guess it's also worth noting that Ethereum was trading probably around 3,100 when we put these targets together, and it's snapped up a bit since then. 7,000 is definitely the lower end of the range that we'd expect to see. I think there's certain psychological levels that Ethereum has to clear. Of course, the prior all-time high around 5,000 is one of those levels. And then, from there, I think if it hits 7K, it could snap up to 10K pretty quickly. I think that's certainly possible, especially if the narrative continues to reform for Ethereum as it has over the past month or two. The bearish takes on Ethereum have really evaporated over the past couple of months. It was so pervasive to be bearish on Ethereum for in the first 9 months of the year, but I've largely seen that dissipate. So I think if we get some of that, some of that narrative was there for Solana going into 2024, right? Like, here's this asset that's severely undervalued, and so there's tons of momentum behind it. I could see that pick up for Ethereum, and there's so much of what's happening in crypto is still happening on top of Ethereum, and you have so much innovation happening. We spoke about AI and meme coins earlier, right? That's happening largely on Base, and we spoke about tokenization earlier. That happens mostly on Ethereum. We spoke about stablecoins. That happens mostly on Ethereum. So I do think 7K is probably on the lower end of what we'd expect. I would not be surprised to see ETH at least snap up to 10K.
Just in case we missed this too, when you've been reviewing this first prediction, I promise the rest of these will go much faster. We will reference the full blog post, so folks can end up checking that out at bitwiseinvestments.com, or just check our show notes for it. But yeah, specifically for these new all-time highs, You guys had called out $200,000 again for Bitcoin, $7,000 for ETH, and then $750 for Sol, which as of this recording would be almost 3x or more than 3x from where we are with Sol. So I don't want to leave my Sol brothers and sisters out of this. I don't want anyone biting off my head in the comments. So anything else to add on the Sol side? It's been a huge last few years for Solana. I feel like they went through the worst part of the bear market. There was definitely like a lot of questions, across the industry about like, would Solana survive? And, the builders, the investors proved them wrong, and it's thriving. Obviously, it's like a metropolis of DeFi, but also of crazy meme coin activity that's generating like crazy amounts of fees. So yeah, anything else to add there on the Sol prediction?
Certainly, you can't ignore the metrics that around user activity and revenue and performance of Solana when you think about where this ecosystem could go. A lot of that, of course, is meme coin driven today, but the DeFi ecosystem, and you guys probably know better than I would, is booming on Solana. There's a lot of great opportunities across the DeFi ecosystem. Staking on Solana kicks off a nice, juicy yield. So I think we see a lot of stickiness from assets moving into staking solutions on Solana. If there are Solana ETFs that get approved next year, which there are applications out today for Solana ETFs, right? That's another catalyst behind Solana. I think we'll continue to see momentum from meme coins certainly push Solana's price higher and create this kind of wealth effect within the Solana ecosystem, similar to what we saw with Ethereum during DeFi summer in 2020 and 2021. There's another element of Solana that we're really excited about at Bitwise, and that is that we expect to see more kind of serious projects, quote unquote, move to Solana in the year to come. You saw this happen with projects like Render, right? These real world use cases, these deep-in projects utilizing Solana, and a lot of exciting deep-in is actually happening on Solana. So I think we'll see, more of those use cases expand onto Solana. We've seen some of these tokenized funds that started on Ethereum expand to Solana, and I think that all puts wind in the sails.
Yeah, that's a great call out. I think the deep-in market or sector just has a longer time horizon to mature. And yeah, I think we're going to see that over the next few years for sure.
Before we get back to the show, we wanted to share a quick update from our sponsor at Mantle. Metamorphosis Season 2 is live, so now's your chance to restake your METH for CMETH and unlock new rewards on both Mantle and Ethereum networks. With CMETH, you can earn yields from staking and restaking protocols, plus powder for Cook rewards, all while staying flexible across your favorite DeFi integrations. You can start your restaking journey today at meth.mantle.xyz/restake. And special thanks to the Mantle community for supporting us here at the Edge Podcast and the Edge newsletter.
Ryan, okay, we're going to get to prediction 2 here, but just on prediction 1, I want to be sitting here with you a year from now and looking at how much we smashed all 3 of those. That is my goal. So a year from now, remember this. Maybe we'll play this clip when we're doing victory laps, hopefully. Or we're all poor again. We'll see. It can go either way. So prediction 2, you kind of alluded to this earlier. I keep hearing this line that there's a bunch of more people like ready to come on, like big institutional players, maybe more financial advisors coming on board. But you're saying Bitcoin ETFs will attract more flows in 2025 than they did in 2024. What can you tell us about that?
So Bitcoin ETFs set records in 2024. I think it will go down as a Hall of Fame year in the ETF world in general for the first year for Bitcoin ETFs. I think we're today somewhere around 35 billion in inflows into Bitcoin ETFs. That's about 7 times higher than the prior record that was more than 20 years old. And so Bitcoin ETFs had a great year in 2024. But what many people don't realize is that most ETFs do better in year 2 than they do in year 1. It would be abnormal for Bitcoin ETFs to do worse in year 2 than they did in year 1. It would just be continuing kind of the normal trend of ETF adoption to see them outperform in year 2. So we think that's very likely. The best parallel we have for this is gold ETFs, which launched in 2004. And back then, there was so much excitement in the first year when those gold ETFs did about 2.5 billion inflows. People were euphoric. They were like, this is so great. And then the next year, the gold ETFs did about 5.5 billion, right? They more than doubled what they'd done in year one. And if you look at this chart, which we included in the report, it's pretty much straight up and to the right year after year for these ETFs. They grow over time. That grows their liquidity, that grows the attention from Wall Street and investors, and all of those things create this flywheel for more capital to flow into these ETFs. There's a few more catalysts that I think will drive ETF adoption higher. You know, a lot of the investors that we speak to are moving their allocation size up. So we have, you know, what we call laddering up, and 3% being the new 1% in 2025. So existing investors increasing their allocations. New investors coming online through major wirehouses like Merrill Lynch, UBS, Wells Fargo, allowing their wealth managers who manage trillions of dollars in capital to start allocating to ETFs. And we think all of those things will contribute to the growth. But also, you know, you saw our price prediction. If the price goes up, if the price doubles, right, that's less Bitcoin that the ETFs have to acquire. And so there's also, you know, an element here of price appreciation that could play a role.
Like, I think yesterday we might have seen like $400 or $500 million of inflows into Bitcoin ETFs. Can you remind us, Ryan, does that mean that these ETF issuers have to go and buy Bitcoin like from the open market? Or like, I've never known but wondered, like, do issuers ever like keep a reserve and then it's just like an accounting thing, like moving some of the Bitcoin from what's in reserve over to the folks that just bought the ETF? Or is it as bullish as that first scenario, like $500 million of Bitcoin ETFs get bought in a day and $500 million of Bitcoin has to get bought?
Yeah, it is relatively simple in that regard, where every new dollar that comes into the Bitcoin ETFs or the Ethereum ETFs means that the ETF issuers like Bitwise has to go out and buy Bitcoin or buy Ethereum on the market. Now, of course, the same thing happens if the other way. If there's outflows, right, then we have to go sell that Bitcoin or Ethereum, and the flows, the assets flow out of the fund. But it really is that simple. Now, there are days where you see no flows. And in those instances, what's happening is there's the same amount of buyers and sellers of the shares of the ETF. And so they're just buying and selling to each other. So the actual issuer doesn't have to go out and acquire new Bitcoin or sell new Bitcoin or acquire new ETH or sell existing ETH. But there's generally not a reserve that they're holding. When a dollar comes in, we go out and buy Bitcoin. Or when a dollar comes into Ethereum ETFs, we go out and buy Ethereum.
Brian, I'm trying to play out this dynamic in my head of, it would make sense, yes, for there to be more inflows in the new year than what we saw in 2024. That's a lot of buying pressure on Bitcoin, a lot of buying pressure on ETH, and a lot of buying pressure on like what we hope will be maybe like a SOL or XRP ETF. Like, I mean, we definitely anticipate more of these ETFs being approved. Full disclosure too, I'm not like an XRP holder. I am a SOL holder and an ETH and a Bitcoin holder. So anyways, but I'm still rooting for them. I'm rooting for everyone. You never root against other communities in crypto. That will get you in trouble. You always respect the pump. So I'm thinking of that dynamic of all of this buying pressure from Wall Street, but we've seen these like 4-year cycles play out, which arguably are more related to interest rate cuts, even though everybody always relates it back to the Bitcoin halving. And so, yeah, I'm trying to play out like, you know, will this time be different? Because like we are all expecting, as longtime, you know, crypto investors and holders, like we know how ugly it can get. And so I'm thinking like, well, are the folks that are buying those ETFs, especially the institutional buyers, like, I mean, these aren't the folks that normally are like liquidating over the short term, but I guess anything's possible. So I guess any other thoughts there you've had just playing out like what this new dynamic looks like?
You're exactly right. Most institutional investors, with the exception of hedge funds that maybe buy the ETF for some kind of arbitrage play, most institutional investors are just net long investors. Many wealth managers follow model portfolios, which will just have an allocation to crypto. They'll have a 1% or 3% or 5% allocation. And as new money comes in, as they go and gather more assets to manage, that'll just flow into those allocations in those portfolios. For the most part, what we see is institutional investors kind of FOMOing into Bitcoin as the price rises rather than panic selling. And a lot of that has to do with the allocation size. If you have a 1% allocation to crypto and it falls 50%, you've only risked, 50 basis points of the portfolio. That's really not that much in the grand scheme of things. The S&P or the NASDAQ can fall that much in any given day. So it's a function of their sizing not being so overly exposed to crypto that when there is volatility, they don't get shaken out as easily. And then there's this function of kind of continual capital. They're going out and raising assets. Like most financial advisors spend majority of their time going and trying to find new clients to give them money to manage. And then they funnel those into their existing investment strategies and model portfolios. And so if Bitcoin or Ethereum finds a place in those model portfolios, or Solana or XRP, that's just a steady flow of capital coming in that is net long in most cases.
Okay, so next prediction number 3 is Coinbase will surpass Charles Schwab as the most valuable brokerage in the world, and its stock will top $700 per share. Why do you believe this?
So we spoke about this earlier. I'm an ultimate Coinbase bull, and Charles Schwab is an asset or a market that. Charles Schwab is a company that's worth about $150 billion today. Coinbase is somewhere around the $70 billion mark, and so we think that Coinbase is so much more than just a brokerage, right? They have a line into stablecoins and custody and staking and wallet services and L2s and venture capital and trading and derivatives. They offer so many different services. They have a subscription model, right? They offer so many different services. They're kind of like a tech company, but competing with financial services company. So we think that Coinbase's stock can move to 700 next year. Today, it's trading somewhere around 330, maybe 340. So it's a bit more than a 2x over the next year. And, we expect the stablecoin business to continue growing. That's generating a ton of revenue for them. We expect Base to continue to soar in adoption. That's going to become a meaningful business line for them. It already generates tens of millions of dollars every quarter for them in revenue, but we expect that to grow significantly. And then staking custody services is another element of their business that is growing at a very, very fast rate. They custody majority of the assets for the spot Bitcoin ETFs and spot Ethereum ETFs that we just spoke about. They're a huge player in the staking as a service game. And so as prices rise, which we expect they will continue to rise, the fees they generate from those businesses continues to rise as they, as the price of Solana rises and they take a chunk of that Solana staking yield as revenue, right? That means that they're going to grow that revenue even if assets don't change. But we expect more assets to come onto the Coinbase platform. We expect more activity on Base. We expect stablecoins to grow. All of that, leads to Base or to Coinbase benefiting.
Speaking of the different products Coinbase offers, with the ETFs launching, Coinbase has been at the center of that, custodying ETH and Bitcoin for ETF issuers. What about the chance that we'll see ETFs incorporate staking yield? Like, wouldn't that be a huge windfall as well for Coinbase?
Yeah, that would be a huge windfall because, I think what you're alluding to is that if you're already using Coinbase as a custody provider, would it not just make sense to use their staking services? And I think, that does make a lot of sense. It would be weird to use them as a custody provider and then go stake elsewhere. And so, if we see that element of the ETFs in the US be turned on, as it is, by the way, in Europe, where they already allow for staking ETPs, then I think that's just another boom to the staking and custody side of the Coinbase business model.
I feel like we could do a whole pod just on like breaking down the different business models of Coinbase. Like, I'm fascinated by it as well, and like I personally have some crazy targets for where I think it's going over the next few years. But let's get to the next prediction. So you say 2025 will be the year of the crypto IPO with at least 5 crypto unicorns going public in the US. I love this one. Would love to see this happen personally.
This is a really big deal for a number of reasons. One thing that I was observing as I was looking back at our predictions from prior years was that going into 2023, so 2022, this was a month after FTX collapsed, and you had tons of crypto unicorns going bankrupt. We actually predicted back then that another crypto unicorn would go bankrupt in 2023. So fast forward to where we are today, just 2 years later, and we foresee that the environment for crypto companies to IPO being significantly different. There's a few catalysts behind that. I think the macro environment is much more friendly today and will be in 2025 than it was back then, or than it has been for the past couple of years. And then, of course, the regulatory environment in DC shifting so dramatically in a matter of weeks is going to significantly impact the outlook for these kind of companies going public. And so we're really excited about, likely more than 5 to go public is our guess, probably closer to 10. But we think the 5 that we chose here, Circle, Figure, Kraken, Anchorage Digital, and Chainalysis, are all, contenders to go public in 2025. Circle, of course, probably being the most obvious because they've, signaled their plans to do that. But we think it could be higher. We think it could be more. And it's really important, I would note, for these companies to go public. What that does is it cycles capital back to venture capitalists who can finally take profits on these many-year investments. And then that capital funnels into new ideas and back into the crypto ecosystem. So as this happens, that just creates more capital flowing into crypto and helping rise all of the tides.
Ryan, prediction number 5. We were chatting a bit about this offline, that this is sort of already happening. There's this AIXBT that's already launched its own token with another AI agent. This stuff's getting pretty crazy. But prediction number 5 is tokens launched by AI agents will spearhead a meme coin mania even bigger than in 2024. What can you tell us about what you're seeing here?
Oh man, this is one that's so exciting to me because it's the convergence of 2 disruptive technologies. You have AI, which is a high growth disruptive technology. Then you have blockchain and crypto, which is a high growth disruptive technology. And we're starting to see the intersection of those two create new ideas and new possibilities that people wouldn't have thought of 1 or 2 or 3 years ago. So you mentioned these AI agents launching and promoting their own tokens. I think that's a really fascinating area of these technologies that I'm personally very interested in. I've found myself over the past month or so spending so much more time going down that rabbit hole than I had expected. I think I spent my entire week in Thanksgiving kind of refreshing Clinker and like sitting at the Thanksgiving dinner table, like trying to buy newly launched Clinker meme coins, like in my Coinbase wallet. And I think, so I think this is going to be a big meta. It's a combination of a bunch of different elements of the technology stack too. To me, that's super interesting. It's not just someone launching a meme coin on like a pump.fun, but what you're seeing here is something that really wasn't possible in the last cycle. You have low cost L2s where these tokens are being launched on, like Base. You have really user-friendly mobile wallets like Coinbase Wallet that allow you to find these tokens and trade in and out of them really easily with stable coins. You also have decentralized social media like Farcaster, where a lot of this is happening, right? That wasn't possible last cycle. So people can go on Farcaster, they can cast at Clinker, have it launch a token, then go trade that token all from their smartphone, all pretty seamlessly. And then another one that I'm really excited about is Anon, right? Which allows people to anonymously launch tokens through Clinker. And that adds another layer of the ZK technology that's happening here. So to me, of course, it's fun to trade meme coins. It's exhilarating. But when I see this technology stack really starting to build of blockchains, layer 2s, AI, decentralized social, mobile wallets, stable coins, ZK technology, to me that shows there's a there around how this will impact the growth of crypto in the long term, and that's what I'm most excited about.
So there is an AI agent called Luna on the Virtuals platform. And again, full disclosure, I don't hold this. I'm just like fascinated by it. So as an AI agent that streams, like it's crazy that it can like stream and interact with like millions of people individually at once. Whereas like, if you're streaming on a YouTube channel, I mean, you're a human being. You can only work so many hours. You can only be awake so long. You can only interact with so many people. And so then take that sort of framework and apply it to like an AI XBT that's engaging with folks through Twitter. And you just start to think like, wow, like there's so much work that goes into engagement. And these AI agents are going to be able to just basically work an infinite amount of time. And that, I think, is going to ultimately get priced into some crazy sort of mania there. And to be frank, too, I think like we've already started to see some of that play out. But if you look at like the virtuals ecosystem, like it's still really tiny. You know, there's only so many tokens that all are under $1 billion in market cap. And then I think the virtuals token as of this recording is over $1 billion, but I think under $2 billion. So yeah, just wild stuff there.
Egg. A quite astonishing commodity. The cause of your desire. Egg. Which fills the inner void. Egg. Egg.
Eggs are pretty epic, but you know what's more epic? Paying for them with crypto. Borrow, earn, and now pay with Moonwell.
Let's move on to prediction number 6. The number of countries holding Bitcoin will double. This shocked me because if you look at the report, it shocked me to see how much Bitcoin certain countries hold. Like I didn't realize, for example, I think the United States holds around $19.7 billion in Bitcoin for all the seizures that they did. And I'm not sure where else they would have gotten it from. But then you have a developing country like El Salvador, which has kind of been a flagship name in this effort to build a reserve of Bitcoin. They hold $595 million in Bitcoin. So anyways, Ryan, what are your thoughts there? Like, not surprised by the doubling number, but more like shocked at all the countries here that do hold it. I really just track like El Salvador. I forgot about the fact that China has close to $19 billion of Bitcoin as well. Like, these are huge numbers.
They are huge numbers. I urge everyone to look at the graphic as you mentioned, because it was really fun to plot not only how much Bitcoin each of these countries owns, but how far it spans the world map. I mean, you're talking about countries everywhere from the U.S. to El Salvador to Finland to China, and of course they vary in how much they own of Bitcoin. And you're exactly right. Majority of these countries, with the exception of El Salvador, have been through seizing crypto assets. I think Ukraine received Bitcoin when the war in Ukraine broke out, right? And that's a large part of their holdings. But to me, what this shows is that there's already enough countries allocating to Bitcoin that if one or two more start to do it, you're going to see dots pop up all over the world map of countries holding Bitcoin. And of course, that has an impact on the demand for Bitcoin and therefore the price of Bitcoin because it's a supply-constrained asset. But I think it just goes to show how far this asset class has come in 15 years. I mean, if you were sitting talking with Satoshi and you said, hey, in 15 years, China's going to own 190,000 Bitcoin, or the UK is going to have 6 billion worth of Bitcoin. And by the way, Russia's talking about buying Bitcoin and Poland's talking about buying Bitcoin. And other countries are likely already buying Bitcoin. The on-chain sleuths just haven't found the wallets and those countries haven't announced it yet. So we think that it's very likely that this number of countries holding Bitcoin, which today sits at 9, will at least double to 18. I personally think it could go higher. And, the main reason for that is that this game theory, I believe, will play out around once one or two more countries start buying Bitcoin. You'll see many countries dive into it.
Ryan, prediction 7 here. I'm going to read it off, but I have a quick comment that I want to kind of tag into it as well. So you say Coinbase will enter the S&P 500 and MicroStrategy will enter the NASDAQ 100, adding crypto exposure to nearly every U.S. investor's portfolio. And I just want to ask, like, what's kind of the deeper meaning of that? Like, if you can explain, once something like a MicroStrategy, for example, is added to the S&P 500, is there like an underlying new bid for all of the people in that index to kind of like get on side and have enough MSTR? And therefore, what does that do, like the second order effect to Bitcoin? Because, MicroStrategy is just made up of Bitcoin, but does that make sense?
Yeah, that's a really good question. I love the way that you framed that up. So yes, this is important for a couple of reasons. So one, most investors in the U.S. don't have any crypto exposure in their portfolio, but most investors in the U.S., I would go to say nearly almost every investor in the US has exposure to the S&P 500 or the NASDAQ or both. So it's really really important here that with these changes, if they happen, that will change, and nearly every US investor will have exposure to crypto in their portfolio. But what you're talking about, I would say, is the most significant impact of this happening. Today, there's $10 trillion worth of capital in funds that track or directly indexed against the S&P 500. So every single one of those dollars, every single one of those funds has to buy the constituents in the S&P 500 index. So when you have an asset like Coinbase entering the index, that means that all of these different funds has to go out and sell whatever Coinbase is replacing and buy Coinbase stock. The same thing is true with MicroStrategy if it enters the NASDAQ 100. And by the way, this kind of capital is generally increasing year over year, right? Because many investors just allocate to their portfolios on a monthly basis or on a quarterly basis, and they just buy what they already have, which in most cases, as I mentioned, is the S&P 500 or the NASDAQ. And so you start to see this permanent capital flow into these funds that then has to get allocated to Coinbase or MicroStrategy. So it's buying pressure. That's the most significant element of this happening, other than the mainstreamification of these companies and of crypto. If you just think about the 10 trillion that's indexed against the S&P 500, that would lead to 15 billion worth of Coinbase purchasing happening once it enters the index. And that's because the way Coinbase's current market cap relative to the other constituents right now would result in about 15 billion of capital flowing into Coinbase. NASDAQ is smaller, far fewer assets are indexed to the NASDAQ 100 than the S&P 500. So the order magnitude on MicroStrategy would be significantly smaller, but it's still the same kind of long-term capital effect. And when you think about $15 billion worth of Coinbase stock being purchased, it's only a $70 billion asset, right? That's a lot of buying pressure on Coinbase, the stock. So it's really important from that perspective. One interesting question that you had that I haven't been asked before is, what does this mean for Bitcoin, particularly for MicroStrategy? And I think that's super interesting. What we've seen in the past is as MicroStrategy's stock rises, right, this would create buying pressure, ideally rising the price of the stock. They issue convertible notes and they go out and buy more Bitcoin, which then generally rises the price of Bitcoin. So I think that's something that could happen here, right? You see buying pressure from these funds that are indexed against the NASDAQ or benchmarked to the NASDAQ. That brings more capital into MicroStrategy. That raises the price of MicroStrategy. MicroStrategy then issues convertible notes that they then use to go buy more Bitcoin.
Yeah, it actually creates just a crazy loop there if this plays out kind of the way, like in the timing that it could, because right now, depending on which day it is, MicroStrategy is, I think, trading at about, a 2.5x to 3x almost levered position to Bitcoin. And I think there's just so many people that have been talking about shorting it. But if you're talking about shorting it, kind of heading into like a situation like this where there just needs to be a bid to get people on side for their exposure, it's just really wild dynamics that are playing out. And I'm starting to see like this wholesaler move with MicroStrategies. It has a major impact on Bitcoin now. Like he's become such a huge force and a constant bid in the market that it's like it's distorting a lot of things. It's just like really wild to see. And I don't know where this experiment ends, but I'm enjoying the ride here.
One other thing I want to follow up on is if Coinbase were to enter the S&P 500 and MicroStrategy enters the NASDAQ 100, is there like a process there for us to follow? Or is this happening behind like closed doors? Like I'm just totally ignorant to that process. And like the fact that you're predicting that has me thinking like you guys must like know something, that I don't, being as ignorant as I am to this. But like, is it basically like a done deal, or is there still like more to consider there, or like something that could disqualify them from entering these indexes?
It's a really good question. If you've ever opened the S&P 500 methodology or index methodology, like I have way too many times that I would have hoped I had to, it is a 75-page document of all of the different eligibility criteria that constituents have to meet in order to be in the index. Now, Coinbase meets that eligibility criteria historically hasn't met the market cap criteria, and same with MicroStrategy for the NASDAQ 100. But if they meet all of the criteria at the annual reconstitutions, which happens in December. So every December, the index management team and committee looks at the universe of investable assets that have a market cap over X and that meet all of that criteria. And then they grab the top 500 for the S&P, or they grab the top 100 for the NASDAQ. And, then they kind of print what that list of companies is. And until the next reconstitution, which happens the following December, those are the assets in the index. And then the funds that track those indexes go out and buy those assets. And so, you can kind of look at where the market cap of the existing 500 companies in the S&P 500 is today. In the lower assets there, you can look at other companies that you think would be eligible to enter at the constitution based on market cap and other eligibility criteria. And that's how we've mapped Coinbase into the S&P 500. And that's how we've mapped MicroStrategy into the NASDAQ. And we will know very soon, whether that happens or not at the annual reconstitution for each of those indexes, which happens in December.
So let's move on to prediction number 8. The U.S. Department of Labor will relax its guidance against crypto and 401k plans, enabling billions of dollars to flow into crypto assets. Tell us why the boomers are going to buy our bags.
That's a great way to frame this up. That's exactly what is going to happen if this one comes true. I think this is one that not a lot of people know about or remember happening back in 2022. The Department of Labor issued guidance cautioning 401k plan fiduciaries, about the risks of adding crypto to their 401k plans, and said that they would actually, undertake an investigation into those providers if they did that to protect the 401k participants from these risks. It's kind of like an Operation Choke Point 2.0-esque thing that happened behind the scenes. And by the way, this has never happened for the Department of Labor for any other asset class. So this is another example of where crypto is being treated differently than other assets, right? They needed to protect Americans from investing in crypto. Meanwhile, by the way, since this has gone out, investors have missed 2, 3, 4x since 2022 by not getting exposure to these. So a lot of protecting that's happened from that. But I'll digress and talk about why this matters. It matters because there's $8 trillion in assets in 401k plans in the U.S. I know so many people that don't invest outside of their 401k plans. But what they do is every 2 weeks when they get paid, they allocate some capital to their 401k, and then their 401k goes out and buys basically on a long-term basis their portfolio that they're allocated to. And so historically, none of that capital, none of that $8 trillion worth of capital has funneled into crypto. So if you think about that just from a math perspective, if this guidance gets lifted, which we expect will happen in 2025 as we have this regulatory and admin change in DC, if this guidance gets lifted, that means that every single week, more capital is funneling into these 401k plans. And if just 1% of the existing capital gets allocated to crypto, that's $80 billion of new capital that's entering the space. And there's a steady flow thereafter, as we spoke about, or as I mentioned, right? Everyone's allocating to their 401k plan on an ongoing basis for the most part. So that means that it's $80 billion of new capital with a steady flow thereafter. And then if you want to be more bullish than that, you say, okay, what would 3% capture be if 401k investors allocated 3% of their portfolio to crypto? That's $240 billion of initial capital flowing into crypto assets. So this isn't similar to the Coinbase, S&P, NASDAQ, MicroStrategy. This is, pretty permanent capital that's net long, that kind of has steady inflows week after week that would be going into buying crypto assets, crypto equities, and have more buying pressure on the assets that we all hold.
As a Canadian, I wasn't aware that there was that much capital that didn't have access via their 401ks. That's just incredibly bullish. Okay, prediction 9, stablecoin assets will double to $400 billion as the U.S. passes long-awaited stablecoin legislation. Again, this one's incredibly bullish as well, so hopefully it plays out.
Yes, look, stablecoins are one of those areas of the market. I think I mentioned this earlier as we talked that I just love. So stablecoin legislation in the U.S. is one of the 4 catalysts that we think will push stablecoin market capitalization or AUM to double next year above 400 billion, right? That's kind of low-hanging fruit for the new admin in DC and new Congress to pass because it's already been in the works and it's already had some bipartisan support. So we think that pro-stablecoin legislation in the US will be a big tailwind for the growth of stablecoins and for new issuers into the space like banks, like fintechs. We also feel that there will be more fintech integration of stablecoins if you have pro-stablecoin legislation. I think it'll happen regardless of legislation, to be honest. But we're already seeing we're already seeing signs of this, right? PayPal launched its own stablecoin in 2023. Robinhood recently announced plans to partner with Kraken and other crypto firms to launch a global stablecoin network. You saw a $1.1 billion acquisition of a stablecoin platform when Stripe acquired Bridge earlier this year. To kind of put that in perspective, right? What was another company that was acquired for $1.1 billion when Facebook acquired Instagram? So these are huge deals that are happening in the stablecoin space and that we think will push AUM higher. Two more catalysts is the continued penetration into global payments and remittances. We're already kind of starting to see that happen with this $45 million deal that Tether financed for a crude oil transaction earlier this year, right? It's like a tiny fraction of the multi-trillion payments and remittances market. But I think that, clearly people are starting to recognize that stablecoins are a low-cost, 24/7, 365 high-speed way to settle transactions. And we'll see more of that happening in 2025 and beyond. And then the last kind of wind in the sails here for stablecoins is just bull market growth. If you look at the chart we included in the report from 2020 to 2022, and through 2021, right? That was kind of the last cycle for the bull market. Stablecoin AUM just skyrocketed. You're talking like 20 billion or less up to 175 billion. And so we expect to see more of that happening as we, enter another phase of this bull market that we expect to be entering.
There is a lot to be bullish on there. I wasn't anticipating the second half of our discussion to be as exciting as it is, because that first prediction, it hits home. Like, we're basically saying that Bitcoin, ETH, and Sol are going to all go up, and we know if they go up, it's generally good for the rest of the market. But I hope folks listen through the end of the podcast here, because I think this is where the analysis on your guys' side really shines through. So prediction number 10 is the value of tokenized real-world assets, RWAs, will surpass $50 billion as Wall Street's embrace of crypto intensifies. What more can you share there?
I mean, I hate to keep referencing these charts for folks that are listening without watching. But again, here's a chart here that shows the value of tokenized real-world assets from 2020 to the end of 2024. And it might be one of the prettiest charts I've ever looked at. It is just straight up and to the right. And, that's just scratching the surface of the tokenized real-world asset space. I think you mentioned earlier that sometimes we talk about tokenized real-world assets and we completely ignore stable coins, which we are doing here for this prediction, which is worth noting. But it really, before, it wasn't that big of a deal. Tokenized real-world assets were a small part of the market. Today, they're about 15 billion, and we believe they'll grow to 50 billion next year. And we think that will be driven by increased adoption and tokenization from Wall Street. There's been this regulatory gray area of tokenization. I don't even know if it's a gray area or just a red area where Wall Street has not entered the market because of current regulations and the current, approach to regulating crypto from in Washington. And so we believe as that changes, like many of these predictions, right, a lot of this we think will come to light once we have this new administration in charge and we have new regulators in place that are pro-crypto. But we believe the tokenized real-world asset space is set to grow, and we think it'll be boosted by institutional capital from Wall Street. If you think about firms that are already doing it, like Franklin Templeton and BlackRock, I think you have a similar game theory playing out here as you have in the Bitcoin Strategic Reserve, where other firms are going to sit by and see these asset managers going on chain and do nothing. And so I think that we're going to see a huge boom in tokenized real-world assets across all these different categories: private credit, commodities, institutional alt funds, and more. So I'm really excited about where tokenized real-world assets are heading.
This is a bonus prediction, and I'm going to give gold Bowls, sorry. Just a minute to turn this off, pause it, mute it, whatever you want to do. This is a trigger warning for gold bulls. So in 2029, Bitcoin will overtake the $18 trillion gold market and trade above 1 million per Bitcoin. That is a bold claim.
It is. And as you mentioned, I hope Peter Schiff isn't listening right now to this podcast, because he's screaming into the room he's in right now if he is. But look, we think that this is not the end game for Bitcoin. This is just one phase of Bitcoin's ultimate growth. Gold is the most valuable asset in the world, by the way, at an 18 trillion market cap. But we think Bitcoin addresses more than just the gold market. And so we believe that not only will Bitcoin surpass or hit gold in market cap, but it will far surpass it over the long term. Today, if it were to have the same valuation as the total gold market, Bitcoin will be trading at 1 million per Bitcoin. Now, historically, we've seen these, and we talked about it earlier, these 4-year cycles play out in crypto. And whether you believe that's going to continue or not, what we have seen in the past is higher highs and higher lows. And there's so many catalysts that we've spoken about on this podcast today that we foresee being long-term tailwinds to the space, long-term capital coming into the space, increased regulatory friendliness towards crypto, growth of ETFs, governments and corporations buying Bitcoin. There's so many catalysts that fuel the growth of Bitcoin that we think in the next 5 years, in 2029, Bitcoin will cross 1 million per coin.
Ryan, this was fantastic. Thank you so much for coming on. I think this is a good place for us to wrap up the conversation. So I want to remind our listeners that they should first learn more about Bitwise by going to bitwiseinvestments.com. They should follow Bitwise Invest on Twitter or X. Follow Rasterly Rock, which is Ryan's personal account. Ryan, happy holidays. Thank you for coming on. This is a holiday tradition. This is the most important holiday tradition of the years, talking through predictions for crypto with the head of research at Bitwise. But yeah, any final thoughts for us or recommendations for folks? What if they're looking for a job at Bitwise or just want to get in touch?
Yeah, I love it. Well, thank you so much for the kind words. I love this tradition as well, and appreciate you guys having me on and the fun conversation that we had. I think you're right. Go to the Bitwise website. All of the research that we produce, all the educational materials that we produce is free for anyone to access. We have this CIO memo that Matt Hogan, our CIO, writes every week. It's 5 minutes or less. It's free to sign up for. And I think it's one of the best pieces of content put out on crypto on an ongoing basis. So I would urge everyone to sign up for that. Follow us on Twitter if you are interested in getting into the crypto space or, working with us at Bitwise. My DMs are open, and, we post jobs on our website. But most importantly, we appreciate people, being on the journey with us. Appreciate you, Nomadic and DeFi Dad, for having us on. And I just could not be more optimistic for where we are at in the market for crypto and where we're headed in 2025. So really excited to come back in a year and see how we did with all this.
One last thing, just a quick shout out to Hunter, Jeff, and Matt at Bitwise. If you hear this podcast, we would love to have you on as well. Ryan is absolutely, the cream of the crop, but, we would be willing to have a guest of your caliber as well. So yeah, please reach out. And Ryan, congrats, Happy New Year, and hope you guys have a great time at the Bitwise holiday party. Thanks everyone for tuning in. If you're a talented founder or developer, please consider reaching out to our team at fourthrevolution.capital. And to stay up to date with future episodes, plus get expert tips, strategies, and exclusive content, subscribe to our free newsletter at the-edge.xyz.